Guess that means I got to get going up. Good morning. How are you doing? It's a Friday, the second greatest day of the trading week. The reason for it is on Thursdays we plan next week. So like, what's the point of Friday? Yeah. So anyways, good morning, everybody. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. It's pretty amazing, isn't it? So we are here today to conduct technical and fundamental analysis together with the overriding goal of putting together trade plans. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, good to see you. So, yeah, we got another Friday on the board. We're still like acting, reacting, and reacting to the reaction to the invasion. Oh, that's so old news though now, right? So anyways, support and resistance are the key. Risk on, risk off is the key. Supply and demand is the key. And we're going to look at all of that using technical analysis. We're going to try to separate price and market to make sense of all of this. So if this is new to you, ask questions. If this is new to you, subscribe to the channel. I've had this YouTube channel. Well, I've been on YouTube, let's say, for, how old is YouTube? That long. Before you even heard of YouTube. Before YouTube was owned by Google, I was uploading Forex videos. So I've been doing this a long time. So I have a few years under my belt, and I'm willing to share what I've done right and what I've done wrong with the hope that you can benefit and get to success sooner than later. But remember, the secret sauce is blood, sweat, and tears for years. So ask questions. I am your humble servant. I recommend that maybe you read my book. You're like, man, I don't want to buy a $75 book. Hey, man, I don't want to buy a $75 book either, right? So anyways, all right. So then how about the free training video courses? Yep, that's in the link below. If you do want to buy my book, it's in the description below. If you want a link to my chart templates, the link is in the description below. If you want to visit tradersway.com and open up a demo account, which I do recommend, the link to Traders Way is in the description below. If you want access to my paid training videos or my paid live groups, the link is in the description below, yo. It's down there. So anyway, so if I can't help you today, maybe I can help you next week. But you could also help yourself by accessing those resources. So anyways, welcome. Again, you're going to have to choose a broker, and I recommend Traders Way just, again, by how they have acted and behaved in the real world, not just a banner ad promising you cheap spreads. What a weird way to pick a service provider. Okay? So instead, choose one that has earned your loyalty and respect. Bum ba bum ba bum bum ba 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 ba. Look at that. Yeah, I need to figure out how to turn that chat off. Maybe if I click that, it'll go over there. There we go. Bum ba bum ba ba. Hang on, just trying to get the webcams. If you're in the day trading group, feel free to log in. Now I can't make that small because apparently the chat box is so important. Hang on, I'm getting there. I'm getting there. All right, cool. So, yeah, let's get on with the world here. Something right in the world today. All right. Let's cascade these. All right, cool. So, dollar mix bag. Again, yen kind of taking a breather from its strength. Okay. Pound, still weak. Kiwi, Euro, and then Aussie. So the only thing kind of like, well, I guess Aussie and CAD are still risk on. You can almost think about it like gold and oil or something like that. But you can see most things are taking a break, taking a breather. Boy, it was exciting, huh? Did you guys see gold? What was it, up 200, down 200 in the same day? Right? There's lots of bones outside of the cave, right? That's a reference to the quest for the Holy Grail. I soiled my armor. Anyways, yeah. What a day, huh? Up 200, down 200. Yep. But anyways, let's take a look around. See, apparently I got a trade on there. Damn. Look at that. I shorted gold on a 5-minute chart and started the webinar. I guess it worked. Jeez. That's actually pretty good for gold. What is that? $1,200. Hey, that's pretty cool, man. That's a big half hour. All right. Cool. I didn't mean to go there. Actually, I kind of did. Sorry. That just threw me off. I forgot about that. See, pissing around, scalping. Anyways, yeah, look at this is what I wanted to talk about. Sorry if that trade's distracting. Again, I didn't mean that. This is a big day, huh? Do you think someone that bought this was disappointed when it actually made a lower low? Like, you're not thinking lower low, are you? When it moves that far. Okay? Let me show you again. So if I just shorted this right 15, 20 minutes ago. If that let's make this a little thinner. Okay? If this pissy little 5-minute chart trade is $1,200, what the hell is this worth? And while you're up there, you're thinking you're the richest, greatest trader in the whole damn world, and this is going to go up forever, and you're going to trade in your small jet to get a bigger jet, trade in your small yacht to get a bigger yacht, right? Trade in your old used pathetic Veyron to get a better Bugatti, and then all of a sudden, oh my God. Just, you're right. You're homeless. You're crying. You're on the ledge, right? So, crazy day. Because nobody expects that. Just nobody expects that. But hey, man, I'm telling you, the tsunami goes back out to sea, right? So you got to be careful in these situations. So, anyways, but let's pray for down. Since I'm again, that little scalp's pretty funny. Didn't expect that much, but cool. So down is the move right now because we have, if I get my drawing tool, what's kind of in play here, right? But what we need to do is then connect all these dots, if you will, and see there's obvious support there and there's obvious support here. So, it'll be fun while it lasts, but it's not likely to last, let's say, based on technicals now, right? Darkus is put on, yeah, it's break even. Right. See, I've already moved it to break even. Right, there's the stop. So anyways. Yeah. All right. Cool beans. Okay, it's not going to last. It's, All right, let's do what should we do? Recovery in Bitcoin? Okay. So what happened in Bitcoin yesterday? So this is us scalping using daily candles. Okay. And you take your old support, right? Right here. Okay. That's kind of it. Right? I teach you how to trap, teach you how to trap. Okay. And that's all it kind of really did is went down there, tested. You could treat it like a double bottom or something like that. But interesting how it was clearly like down, up, roll reversal, down, up, roll reversal, down, up, roll reversal, down, up, roll reversal, but down, right? You see how then, right? So then it makes kind of a little bit of a higher high, and then it comes all the way down, and then retest this, and cool. And one of the things I've been discussing is, hey, man, that could be the low for the year. Maybe. Right? Maybe. And why do I say maybe? Risk on isn't supposed to show up for another 4 weeks. But remember, it's different every year. Okay? Like if you're going to plant seeds this spring, what day? You're like, well, that depends. Well, how about next week? Well, no, it's too early. It's too early next week. What are you talking about? The ground's still frozen. Okay, great. Well, what about April? I don't know, maybe end of April, right? So a farmer has a general idea but doesn't know the exact. Same thing like seasonality, like risk on should come back in a normal world unless we have an ongoing conflict, which I doubt, unless we have an exogenous shock or a black swan event. But those things you're not supposed to be able to predict. So if you're predicting a black swan, and I argued this actually in multiple classes at Harvard because people would point out a potential black swan. I'm like, dude, if you think it's potential, it's not a black swan event. That's the whole point. You can't plan for it. It just happens and you got to react. So anyways, barring, all these like a meteorite hitting the earth kind of thing, risk will come back to the market. Okay, cool. So what's the timing of Bitcoin returning? Well, maybe right there. Okay, maybe right there. By the way, last night I suggested that I was thinking about buying a Russian bank, stock in a Russian bank. It's up 50% already. You're freaking kidding me. Since last night, it's up 50%. Now it's too expensive to buy, right? But it's still down 75% for the year. I'm like, oh man, I missed it. So anyways, I'm hoping it gets crushed one more time and I can buy it. But isn't that funny? Since last night, 50%. Remember, I was going to drop $1 billion on it. Man, I could have made $500 billion overnight. But anyways. Oh, well. Okay, anyways. Kind of interesting. So maybe a sign of risk on again. My WTI. Okay. And so we got the logical target. Let's go back to this. Okay. There's sort of like this, what's normal and what happens when, let's say, I don't know. Yesterday, I argued there wasn't panic in the streets, that there was logic going on. Remember how I opened up that webinar? I'm like, you might feel like the media is kind of showing panic and it kind of gets us amped up like, oh my God, it's the end of the world. But then my position yesterday in the live stream was, look, there's still a lot of logic. The market isn't trading with panic and fear, but these prices are quite legit. Like you're right. The market is behaving efficiently. Yes, it's going up and necessities there, but it's respecting logical prices. Okay. And so now if we erase the unusual part of it, which is this part, usually we don't go to R3. What would have we expected for this week? That's it. Like I drew it days ago, right? That's what should happen this week. And it went a little higher and then it came back, but this might have been that risk premium. And then what? Strategic petroleum reserve being tapped, which means supply increases. Cool. And all is right as rain. Okay? Right as rain. Very cool. So thank you. And it's not just our SPR, it's the SPR of everybody, right? The International Energy Association. And the IEA is the counterpart to OPEC. OPEC formed a cartel because the Western world was raping and pillaging the Middle East for decades, generations, right? And oil producers were like, hey, man, you got to give us fair prices and all that kind of stuff. But you got to remember, Europe was recovering from World War II, and the United States was booming in the right in the 30s. We were building skyscrapers in New York and all that. But America was growing at a very high rate, 7% a year. And much of that was based on Europe owing so much money to the United States because of all the loans made in World War II, but also cheap energy. So anyway, so by the time we get to the 60s, OPEC's receiving just, tiny amounts of money for their oil. And so they're like, hey, man, you got to fix this. You got to treat us right. We're working hard for you. We're giving you the energy you need, but, you got to treat us right and give us fair prices. And, of course, the Western world's response was F you. Right. A diplomatic version of, yeah, we're not going to pay you more. So long story short, a cartel is formed, and they're like, we're going to control the supply of oil now, and you're going to have to pay us more. So now the response to the OPEC formation was the IEA, where you get not the producing countries, but the countries that import oil. Because now they looked at what OPEC was doing, which was just simply trying to get fair prices. Oh, they're like, wow, you're weaponizing supply. They're like, dude, we just want you to pay us a fair value. They're like, you're weaponizing it. So anyway, all the importing countries got together, and they put together strategic petroleum reserves. So if OPEC cut off supply, they would have, let's say, 2 or 3 months worth of oil. Every country has 2 or 3 months of oil in supply just in case OPEC cuts off. So what Biden announced last night is he called a bunch of these countries, probably all of them, right? They just called the IEA, and like, we're going to tap this supply to increase what's actually being used. And I watched this, like, this is the candle. He said it. We're going to tap the SPR. Boom. Oil's down. Hard, fast. It was funny. Okay. Cool. So that's what's going on there. Okay. And that's why that has kind of, right? Cool. Cool. It's PCE day, isn't it? Yeah, we got PCE in 5 minutes. Yeah. Let's do that. Hang on. Forex.Today, Forex news calendar. Pretty sure it's PCE. Harvester of profits. Oh, wait, PCE? Durable goods, I don't care. Yeah, PCE. All right, cool. It's funny how I have a calendar in my mind and I never quite know. It's just in my mind. I'd have to double check. But I go through my life like, what day of the week is it? Oh, well, PCE came out. Like, so, what's the date today? I don't know. PCE came out, so it's probably about the third week. It's like you judge time by news releases. Okay, looking at this while we wait a few minutes here. Okay, German GDP 1.8. Losing some over the quarter. Okay. Not that good, huh? Nobody's buying BMWs? It's terrible. I wish we didn't have a supply constraint. I wish the supply chain was good and just people weren't buying cars. Wouldn't it be good if you can just like roll into a BMW dealership and they're like, oh my God, we're so happy to see you here. Everything's 40% off today. You're like, I want that one over there. You got anything bigger than that? Right? Yeah, that would be great. But unfortunately, so it looks like Germany's not producing. And yet there's no supply. Maybe there's no supply partly because they're not producing. So anyways, 1.8, mediocre, huh? Personal consumption expenditures. This is important now. We call this PCE. First of all, it's important because the Fed watches PCE more than they watch CPI. But also, one of the questions economists are asking is at what price or at what time does high inflation kill demand? Okay. So you're thinking about buying a BMW. So you go to the BMW dealership and they only have 3. So supply is low. You're like 3 and all these colors suck. Okay. You're like, well, okay. How much is that one? You're like, you're only half into it now because you don't even like the colors. It's not even the model you wanted. And they're like, well, that's 30% more than usual. You're like, 30% more than usual? I don't even think I want this car. Yeah, well, it's up 30%. You're like, well, forget it then. Screw you. I'm not going to buy this. I'm going to get a Toyota, right? So anyways, off you go. So that's what PCE is. What we're looking at is we understand there's inflation and prices are high. Up until now, Americans have been buying anyways. They're like, okay, I'll buy it. Okay. But what we've been talking about is as Americans drain their free Biden money, they're going to tolerate high prices less and less. When it's free money, what the hell do you care, right? Right? I got my Biden money, right? I'll take it. Okay? So you buy the PlayStation, but pay $300 more for your PlayStation, right? But you're not willing to pay $30,000 more for a BMW. Okay, so at some point the price kicks in. So a lower than expected PCE would indicate that high prices are becoming a problem, and Americans are not spending their money. Okay. And this is something, right? This is something that the Fed does watch. Okay, the number should be out. I don't know when it prints here. If you have the number, please post it in YouTube. Harvester of Sorrow. Anybody got a number? Oh, you're talking about the Porsches. There's $400 million of Porsches, Audis, and Lamborghinis. 5.2, as expected. Okay, so it's okay. There's $400 million of Lamborghinis, Porsches, and Audis on a boat in the middle of the ocean, and the boat's on fire. And you're like, well, that's cool, though, because the crew can put it out, right? No, the crew left about a week ago. So my plan is I'm going to go out there in a raft and tow it home, right? And maybe there'll be a Lambo. Can you imagine you jump in there, you're like, man, this Aventador is nice, but it smells like a campfire. I'm like, I got a deal. I think your car's on fire. No, it just smells like it's on fire, right? Yeah. Wayne, can I trade through price action and technical analysis alone in Forex? Yes, if you have a half a brain, you can do that. Yeah. If you were going to only focus half a brain, that would be the place to do it. Yeah. Now, I'll challenge you, though, once you get that under under control and you start to figure that out, I would challenge you to expand to the other side of your brain and use some fundamentals. Okay? You want to add some fundamentals. I mean, here's what it comes down to. You should be able to ask why. Okay? Technical analysis I love, and it tells you what is happening. It doesn't tell you why. And if you don't know why, you can never sort of anticipate and prepare for the future. You'll always be susceptible to just sort of a reaction. Okay? You'll be very reactionary. And here's the issue with that, Simone. You will never be able to get big, okay? Which means you could never compound. You can never add to winning positions. You'll never really be able to let things fully run. You won't know when to take profit either. So I think at best you're going to find that technical only is a lot of hard work, okay? And it's sort of like lots of never-ending hard work. Way of looking at it is you are getting paid by the hour. That's it. You get paid by the hour. You'll get into trades, you'll get out of trades, you'll get into trades, you'll get out of trades, and you'll constantly look at it. Okay, well, this means I guess I need to be a bear now, and then you're a bear for a while, and then that ends, and you get 3 winners and 2 losses, or 3 winners and 1 loss, whatever. Okay, and then you go the other way, and then your day is over, and you close your positions and you leave, and you have nothing working for you. You are working for your money. But the key to wealth is having your money work for you. And so to be able to make those types of decisions, you're going to need some fundamentals, and you'd have to use, like I was saying, I was like literally the other side of your brain. So, you know how they say like one side of your brain is sort of more artistic and the other one is more of an engineer. Yeah. You gotta ask sort of the bigger questions. Okay. And that's a different part of your brain. Cool. And to me, the much more interesting thing. Okay. So I have a pretty clear idea what I intend to do in April, and we're only entering March. And if you're just a pure technician, again, I love technical analysis. I ain't picking on that. But I'm like, if you're a pure tactician using technical analysis only, you're not even prepared for March. I'm already prepared for April, May, and June. Okay? I plan my family vacations around when we're going to lose volume and volatility, and the trend is likely to either constrain itself or end. I plan my literally family vacations where I'm like, hey, everybody, time to go. Going to the beach now. Why would I do that? Because I have astute assumptions of market behavior, and that's fundamental. That's fundamental, that's seasonal, and all that kind of stuff. And a tactician wouldn't be able to do that. So I only invite you to learn both sides. Okay, Simone? Cool. Okay, Brent down just as much as WTI. Once again, SPR being tapped. Okay. And it's these types of things are, how you say it, it's inconclusive. That's not the right word. I don't know why it's hitting me. Indeterminate. The response of what's happened is indeterminate. Okay, so let's go Econ 101 here. Maybe it's Econ 201. Price, quantity, oil. Okay. So quantity gets bigger this way. 1, 2, 3, 4, 5, 6, 7, whatever. Whatever your quantity is. Millions of barrels a day, whatever. That's a P, by the way. Sorry. Slow it down, Wayne. Slow it down. Take a deep breath. Okay. Price. 1, 2, 3, 4, 5, 6. And of course, this could be 10, 20, 30, 40, 50, 60, whatever. Okay. Great. Okay. Demand for oil is this way. To explain it, why is it a downward slope? Well, when the price of oil is at 6, the demand is only going to be 1.5. When price for oil is 2, because it's cheap, lots of people will demand it, and there'll be 7 demand. Okay? So the higher the price, the lower the demand. The lower the price, the higher the demand. Okay? That's why it slopes that way. The second part of this is the supply. Okay? So we go to supply 1 because I'm going to shift supply. With the initial attack of Russia into the Ukraine, there is a fear that supply would be constrained. Energy supply would be constrained. So we need to shift this curve. Okay? Because it's going to affect everything. We're going to shift this curve left because that means less supply. Okay? So we go from our old equilibrium of around 4.5 at a price of 3.5 to, right? We lowered the amount, the quantity. The fear was the war would cut off energy supplies. So we go from 4.5 to 2.5. Okay, that's why we shifted this curve to S2 from S1, less supply, but that leads to higher price. So prices went up for a day. Then Biden said, we're going to add oil to the global market. And the thing is, well, how much was the shift left? We have it here, but we don't know. It's not a precise number. It's really a guess. Well, if there's going to be a contraction in oil supply, how much? And like nobody actually knows. You see how that's sort of a fuzzy logic? Like, oh, there might be less. How much less? Well, nobody really knows. Or let's say you could say, well, all of Russian oil gets cut off, but whatever. So then we add to the SPR, and again, it's sort of fuzzy. Is it here? Is that S3 or is S3 here? Okay. How much will it shift? But nonetheless, let's say it's S3 is this one. Okay. And then supply goes to this new equilibrium, let's say to here. Okay. So quantity goes back up because of the tap of the SPR. And now we move from 5 to 4. But like we don't really know where S2 is, the real S2. It's a guess. But you can get an educated guess if you do enough analysis. But again, it's sort of like, will it actually, will supply really be cut off? Is that really what is likely to happen? And then you zip over here and then, okay, then we add, right? And again, what if S2 never shifted? What if there was a fear of Russian oil being cut out of the global market, but like Germany is voting against that? Germany's like, hell no, right? So what if this was overplayed and this was all fear, okay? And then the Americans / everybody else that the Americans bully around, they tap the SPR anyways, even though it in fact technically isn't needed because there was no supply constraint anyways, and so that would really miss price. It was at 5 and maybe it needs to be at 3. Okay? And so this is what we're trying to work out. Was there a true constraint and was it necessary to tap the SPR? Now, Biden was desperate to tap that SPR. Okay? He moved the needle a little bit on the American Strategic Petroleum Reserve. but it was far less than what was needed. And oil prices continue to go high, gas prices continue to go high, and his approval ratings continued to fall. Okay? But if he tapped more American SPR, then it would kind of impact the energy industry in the United States. He'd probably lose Texas and all that kind of stuff. So instead, this was really kind of great where he can get a whole bunch of other countries now to basically dump oil on the market and drop energy prices to save his ass in the election. Pardon my French. Okay? So that's kind of what's going on here. What's going on? Nothing's right, I'm toned. Okay? So it'd be interesting to see how this market actually reacts, because you might see oil now falling for, I'm not saying it will, but let's say oil falls for another week or two, and you're like, dude, but what about all this conflict in the Ukraine? Well, that's not actually what's playing out here. It's sort of the actuals, not the fear now. The first part is the fear, what we call buy the rumor, and then sell the news. And the reason for it is the fear is much more real before it happens than after something happens. So I gave an analogy last night in the swing trading group of like, you're standing in line to go on your first roller coaster. You guys remember that? Maybe you were a kid and your friends and maybe your brothers and sisters like, oh, you're such a baby, you're such a sissy, you get on it. Right? You're like, I don't want to go. And then your other friends are like, it's cool, Wayne. You're going to love it. And I'm like, no, I don't want to go. They drag you on and you're like terrified. You're going to pee your pants by the time you get on that roller coaster. And at the end, you're like, oh my God, that was great. Right? If you're on a Scottish roller coaster. So, very cool. Right? This is the fear. And then the actual happens. Russia invades. And it's not as big of a deal as you were so afraid of. Okay. And I find that true after about 20 years of doing this now. I fear that, or I have found that the market, it gets fear late, right? Like it shrugs things off until it's really late in the game. And all of a sudden there's a ton of fear. Right? There's like an overreaction. And then there's like the reality kicks in and it's not nearly as bad. And then there's an overreaction the other way. And that's gotten worse and worse and worse over the years. Okay? So I've always said, by the time you see the CNN reporter standing in the waves going, this is the worst hurricane in the history of the world. By the time you see that, okay, that's when the trade kicks on. You need to be a day or two before CNN, right? Because then you're trading the fear before people have been told they're supposed to be afraid. Okay? It's kind of interesting. So if you look at what I was doing, let's say 15 years ago, I was watching weather patterns to predict the move in oil prices or frozen concentrated orange juice prices, or even Home Depot and Lowe's stock. Okay, I would watch hurricanes come off the coast of Africa, but not right. And you want to see how they hit the Caribbean. Okay, and if it comes up in the northern part of the Caribbean, like it's going to hit the top and kind of bounce up a little bit, Home Depot and Lowe's stock, because it's going to hit Florida. Actually, it doesn't even matter if it hits Florida. It might hit Florida. And now you're in a week or two before, and then it kind of goes over and they're like, oh, the Bahamas have a hurricane. And then CNN's going to be at the beach showing some guy hammering plywood on his beach house. And what does that mean? The money's already been spent. People in Florida are putting plywood on their beach house. Where do they get the plywood? Okay. Home Depot, and that's why you're on there. So it's interesting. You gotta, if you're gonna play that fear, you gotta be in it, but then realize that it's always never as bad as people think. Cool. Damn, that gold trade's still falling. How funny is that? It's like a $2,000 scalp. Cool. All right. What should we do with the drunken sailor? Ethereum coming back? Yeah. Okay, let's zip over to dollar. Okay. Durable goods, Darko's posting. Yeah, durable goods are not that interesting really, but what we've seen in the PCE, okay, is consumers are still consuming. Swiper, no swiping, all right? Consumers are still consuming. Okay, here's our pig dog. Okay. Back in the range. Isn't that funny? Just like, okay, we're back. Little bit of overreaction maybe. Well, we'll see. Okay, that's a big risk off end of the world trade. And then they're like, wait, the sky ain't falling. Okay, sky's falling trade, sky ain't falling trade. But there needed to be a readjustment in price for sure. So what we don't know now is back to the top, or is this a sustained move down? Because technically, I mean, look, you can argue over this, okay? Here's when you get things like the situation with Russia and the Ukraine. I think it's a fallacy to argue that this is technical. And you say things like, well, Wayne, you know what this wick means? I'm like, dude, be quiet, okay? I know what these wick means, and these wick, and I know what all these wicks mean. Okay, I get it. But this is not technical. Okay, this was not technical. Selling here was technical. I get that, and I know someone that made that trade and did very well. Okay, but it didn't occur because of this, and the velocity wasn't because the entire market is selling the double top. No. This was a response to a new macro situation. Okay? And then sort of the counter response. And now we're learning to kind of live with the situation or reanalyze. But everyone that wanted to get out of a long or get into a short had their opportunity. And then along the way, you have to understand, like, there's algorithms and then there's limit orders and there's a lot going on here, that these things just get triggered just simply because the prices were hit. But nobody was thinking the day before, like, yeah, this is going to drop 300 pips and then put us long. It's just triggered stuff or hit limit order. So I actually know someone that was quite heavy in here, short, and he got out probably, I don't know where it was, but it was in the middle of the night. And all of a sudden, pa-ching, 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 pa-ching. It was all his his profit orders, right? Take profit orders were being hit. And he was crying about this. I'm like, don't cry about that. Like that, he had missed all this alpha. I'm like, look, if you didn't plan for it, you don't need it anyways. And it's fool's gold because it's probably going to come back. Boom. So now what I would say is start fresh and say, what do you think will happen next? Things that needed to happen have now happened. Let's wipe the slate clean. Maybe something new happens out of Russia. If anything, we're going to end the situation. I don't think he's going to be there for 3 years, right? He's going to get bogged down directing traffic, in the middle of Kiev, right? Burn says, you don't think it would stop getting hit and stuff. Yeah, but now that everything's cleared, like, think about that. Like, it's kind of like clearing the slate. Like, everyone's starting fresh. People that needed to get in, got in. People that needed to get out, got out. And many of the people that got in are now out as well because they weren't thinking 300 in a day. Okay, some people are thinking 30, some think or 90. Some are like, oh, just down to the next level support. Someone like I have this for some reason. So everyone that, most people I would say got their numbers hit or they were kicked out. You see what I mean? So now everyone, it's happened. And so I think it's dangerous to go in and just say, it's going to happen again. Why? Oh, well, because this giant thing. Well, again, if that's an exogenous shock, are we still shocked for another big move down? The answer is maybe, but probably not. So now you would want to look at what is the rationale for it to fall further. And if you can put that argument together, then you can put together your technical analysis, right? And then maybe you drop into a smaller time frame. Okay, for your up or your down. But I think it's dangerous, okay? Again, sort of after doing this for a couple of decades, I think it's dangerous to think this. And I think what I've seen over the years, myself, but looking at many other retail traders, is they see this, and they sell, and then they sell, and then they sell, and then they're, okay? And it just keeps going up because the people are regrouping, okay? Because remember, there were bulls here, okay? So they get knocked out of their long positions because of the geopolitical risk, but then they're like, yeah, but the Bank of England's still going to raise interest rates because they have 5.5% inflation. And so they're like, so now that we're back above here, let's start rebuilding our positions. And the bigger bears are sitting more like here. Yet amateurs are like, this is going to be a 382. No, now it's a 50%. Now it's a 618. And right? So typically what happens is you miss this and then you lose. Right? So don't be a cliche. Just be careful. If you're going to do it, just really drill down into your technical analysis, right? So I think, let me go back. What was that all about? That one way back there. That one. I see what I'm doing here. I see what I'm doing. Yeah, I agree with me. Okay. If you are a bear and you are targeting this, okay, one plan that you could have is look at this, okay, and consider something like this. So that's a big trap, if you will. Okay, so you can consider that. Now you drop into maybe a 15-minute chart, and that's kind of what you were looking for. Okay, something like this. That's a head and shoulders. One of the things we talked about in the swing trading group last night is the crown. And a crown, it would be more like this. You're like, well, what's the difference? Oh, this is lower. That's all. Okay. And typically with the crown, you kind of kick off this bottom. With the head and shoulders, you kick off this top. Okay. But that would be a confirmation that you can try because you're a bear and you kicked off here and you're risking kind of like this much plus wherever you put your stop. So maybe you're risking that. And you would have to say, well, that should be at the very least the same distance as that bottom. The very least. Okay. To make it worthwhile. Richard says, and I think he's talking about my hurricane discussions and stuff. How long does it take to play out the market? And this is what I was alluding to. The market tends to push stuff off and it's not important, it's not relevant, it's not important, it's not relevant, it's not important, it's relevant, and all of a sudden it's super relevant and super important, and it goes just like from not important to super important, and you get the giant spikes, and then the news comes out and it's not nearly as big, and then it all collapses. So it's like slow, 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 fast, out. Okay? Right? Nobody's interested until everybody's interested. So that's why, like, if you can think, 3 days ahead of everybody else, right? Like I say, like when you're working with clients, you only need to be 1% smarter. Okay? So if we can be 1 day ahead of the pack, you're way ahead. So now you're on this 15-minute chart and you're thinking this, right? If you're a bear, right? So now you can drop into your Fiverr and start watching support and resistance in there. What about price being 2 standard deviations from the mean? At one point, that tells you two things, Richard. One, that everybody is buying, but also everybody is sweating bullets and thinking about getting out. So I care much more about the slope of the mean than the deviation from the mean. So like one mistake traders and fake gurus make when you're using like an oscillator, they show you like, oh my God, the stochastics is 90% overbought. It's time to sell. No, it's not, dude. No, it's not. That means everybody on the planet's buying. That's why it's overbought. Nobody's selling. Well, then we should sell. No, you should sell when the market is reversing. You don't sell before traders are taking profit. You sell as or just after traders are taking profit. But you're not going to find sellers in a market that's incredibly bullish, right? So they're using the tools wrong. So being 2 standard deviations doesn't mean it will fall, but it does tell you everybody's long if you're above the mean, right? So you got to be careful. All that has to go into context and timing. So going what we're looking at here, I'm not showing you right or wrong. Okay? I'm showing how if you were a bear based on that old support in the past and you still believe whatever I'm looking at, pound dollar, is going to come down. That's all I'm saying. That I'm setting up a potential belief system that people in this live stream might have, that they might want to sell again. So then I found some old support which would act as resistance. Okay, we're around the psych level of 34. Somebody might be thinking of selling it. So I've drilled down, I've drilled down, I've drilled down. You have a strategic plan, but now you're looking for a tactical entry. Our current top is a 618. Then it came down a little bit. Then it tested 50%, came down a little bit. And we're still there, but we haven't, the first part has worked, but there's two parts. There's two parts, right? So we're in the resistance zone and resistance has held, but we have not broken support. Okay? And bears sell here, that's true, and bears sell here. So, right, you're looking at like you could sell at the high or you can sell a break of the low and retest. Okay? And the low is the real low is here. So you got kind of like this. This is really what I'm looking at here, right? So you could take a shot in the dark. It's a little bit of a gamble here. Or wait for a confirmation. And this is a lousy, stinking, no good 5-minute chart. Okay? but it sets up the engagement where you could, for example, have taken it here and then added one and then added one. And every lower high, you're going to keep, as long as it's making lower highs and lower lows, you keep adding, you build. Okay? 1 million, 2 million, 3 million, 4 million, 5 million. Yeah, just. Okay? But remember, the real trade plan here is simply that. On the tactical entry, the even realer right plan is the left shoulder of this move and from yesterday's move. Okay, this is just a re-entry of today's move. Like, we're so zoomed in. This is just today. But you remember, this plan, maybe even the whole thing, this is a retracement of yesterday. This is a lower high of the retracement of yesterday, right? We're drilling in. And now this is a lower low, lower high, okay? This is a lower low, lower high. And this other thing came down and up. And so that is a lower low, lower high. If you are a bear, that's how you're thinking about it, okay? If you're a bear and this doesn't work today, and instead does this, I would be very, very, very cautious of reentry, especially around New York. If New York is taking this back up, that's risk on, and you're risk off, and you're trading yesterday's news, and you might be on the wrong side of the trade. So I'd go cold quick. Cold turkey, man. I wish I could quit you. Okay. Now that's Piggy. Look at our Aussie. Whoa, 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 whoa. Huh? Isn't that crazy? That's a big day. Let me ask you. Do you think somebody bought it there? Or was it bears exiting? Are they using the central pivot as in their algorithm? Are they using the support pivot in their algorithm? Are they using the pivot profit zone in their algorithm? Look at this trade plan I have outlined here. Okay? I have a tiny little trap, probably on a 15-minute chart, trapping it on the first evening. This is probably our swing trading group. Okay? And our target is right there. We hit it. Ishkuputya. Okay. Ishkuputya. Drop down into support. Wowzer, huh? Like, not even a hesitation. No, I don't use Gartleys and stuff. And I have some baggage with that. And it goes back to my very first Forex Trading Expo, and I think it was about 2005. And after my keynote speech, I went to see what other people were doing because I didn't know any other Forex traders, which was pretty funny. So I was kind of excited. I'm like, wow, a Forex Trading Expo in Las Vegas? Wow, I can actually finally meet another currency trader. And I felt bad for me because I'm like, dude, I'm self-taught. These guys are going to figure this out. I don't know jack, right? So I go and I walk into someone's presentation, and he's got something that looks like this, and then something that looks like this, and it's all colored. And he's like, this has an angle, and then this has to do that, and that has to have an angle. And I'm like, oh, crap. This guy's 10 times smarter than me. I'm such an idiot. I'm such a loser. All I do is I buy dips in an uptrend, right? I remember thinking that, like, I just buy dips. I'm not looking at the angle to this. I'm like, oh my God, I should just go back to venture capital. Do the easy stuff, right? Throw a whole bunch of money at a bunch of idiots and one of them will succeed. Pay for them all, right? How easy is that? And then he gets all the way to the end and then he realizes his presentation was screwed up. He got it wrong. He made a mistake. And we're 45 minutes into an hour presentation. He's like, oh, I'm so sorry. And he stopped. He just stopped. And he's like, what? I can take questions? Like, people are like, but what? You just spoke for 45 minutes and it was all wrong? He's like, yeah, there's mistakes on the slide. And well, I can't, there's not enough time to like figure out how to explain it. So he's like, whatever, I'll take questions. And I'm like, I knew it. I was worried about me, but then I'm like, this is an uptrend. Like, not what we're looking at, but what he was explaining, I'm like, dude, this is clearly an uptrend. I would just buy a dip. Like, why do you care about the angle? Like, who cares? Like, why do you need all this other extraneous crap? Okay, maybe throw down a Fibonacci. Like, look, dude, it dropped 50%. It said support. Why don't you throw down another up? Right? Like, what I was doing was so simple. What he was doing is so complicated. One of the things I learned in investing as a venture capitalist is the complicated cool crap doesn't work. It's too hard to make. It's too hard to manufacture. It breaks. Whether it breaks on the shelf or breaks on the boat or breaks in the client's hand, they're all going to return it. You're right? It sucks. You need simplicity, especially if you're going to scale. And venture capital, by the way, is all about scale. You're like, great idea. How do I scale it? Great product. How do I scale it? All right. Oh, you're making 2 a day. I want to make 20,000 a day, maybe 200. How do we make 2 million a day? Okay. You always want to get big, and simplicity is the only way you can get big. And so anyways, I realized at first I thought I was the idiot because what I was doing was too simple. And then I realized after seeing that he was the idiot because what he was doing was too complicated. Okay, so there's my humble opinion. If you got to get that complicated, it's because you wish your mommy and daddy loved you more and you're trying to impress them. Okay? Buy them a Cadillac. They'll be impressed. They're going to think you're a Bitcoin gambler, a crypto gambler and stuff. You're like, oh, whatever. But don't complicate things, simplify things. Yeah. One good idiot pays for them all. Yeah. There's a song in there somewhere. Yeah, venture capital is such a weird business because it's based on 80% failure, right? So it's an odd gig, and I've learned to like it less. I like working with the entrepreneurs, but yeah, this idea of throw a bunch of money down and see what sticks. I mean, you're doing everything you can. A venture capitalist will tell you that, right? We do everything we can to vet our entrepreneurs, and right. But the ugly truth of it is you're actually trying to compete with the other venture capitalists more. So very often you'll pass on pretty decent ideas or take dumb ideas because of your perceived position with your competitors. And your next round is much more important. So if you're an A-level venture capitalist, it's more like, what are the B and C round guys looking for right now? Oh, we want something in crypto. All right, let's go find some crypto crap, right? And just start throwing money at a whole bunch of crypto ideas and then try to pitch that to this next round. And, you're always unloading, but it's never really going to the better idea. It's just going to what's getting money right now. And then, you kind of get sick of that after a while. All right. I'm just showing, look at these things that we were doing the other day. It's not bad. It's not perfect, but you get the kind of idea. If we take this support and that resistance, right? Like, I don't know if you refine this a little bit, but this is still a plausible move. Okay. Like, for example, if you think this is support, first of all, you would have to identify that. So if that is your belief that we are at a level of support, will a bear sell here? The answer is no. Okay? If you sell there, you're not a bear, you're a baroque. I had to throw in an extra syllable there, but yeah, you're not a bear, you're broke. All right, cool. Okay, broke back trader. I wish I could quit you. Okay, anyways, so if it's support, a bull might enter and or a bear might exit. Okay? There's buy orders, there's limit orders, and then there's going to be stop orders placed around it. Chemical, by the way, I just noticed that question. What fundamentals do I need to know to trade crypto? You now need to know macroeconomics. Okay? It trades as any other asset class, risk on or risk off. If you don't know what that means, then you need to learn. Okay? It used to be Bitcoin. Now it's just a place to park money. It's not, you can call it whatever you want, but it just trades like any other asset. When times are bad, you're like, F you, give me my money back. And when things are good, your dollar sucks when things are good. So you got to get rid of your dollar. Get rid of it. What do you want to buy? I don't know. I had an argument with a Harvard economist, my professor. And one of the things he drilled home to me is like, when consumption is up, it's consumption for everything. So it's like, if you fear consuming because you're going to lose your job, you're going to lose your house or whatever, then you stop spending. Okay? Not only do you stop buying premium gas for your Lambo, you sell your Lambo. You're in sell mode. You can go to cash, right? But then when things are good, you got all this cash laying around. You're like, I don't need this cash. I'm a baller. My house is up 20%. My stock portfolio is up 20%. My Forex portfolio is up 20%. Like, I'm a baller and I got this cash. I got to get rid. Let's just spend the cash, right? Like, you can invest it. You can go to the bars. You can go to Vegas. You can go to the moon. But you get rid of your cash and you exchange it for something else. And that would include Bitcoin. And that's what it's become. Okay? When you feel confident, you got cash. Let's get some Bitcoin. Come on. Let's hustle some Bitcoin. Let's flip it and make a few bucks. But when you're worried about feeding your children, okay, it's nice to have cash so you can go to the grocery store. Okay? So I would learn macroeconomics. Don't worry. You can go to Harvard full-time for 5 years and still have an opportunity to trade currencies and raise a family and be a half human being. I know someone that did it. Wink, wink. Including living there every summer. So, yeah, you can get a an education in macroeconomics. Cool. So anyways, so now you go into your belief system, and now you're like, you can drop as low as into your fiver. And what are you looking for? Well, you'd say, well, this looks like resistance, so a bear might try selling that. But you got a bounce here, which a bull might want to buy. So you're going to get some consolidation here, right? Oops, let's do this in red. So now as a bull, though, you're going to look for this type of behavior. And at some point, you buy it or you don't. Okay? You is or you ain't a buyer. Is you is or is you ain't. High volatility favors day trading. Chemical. So the answer is yes. So what do you think? Let's ask our community. Let's do a poll. Will USD CAD go up right now? Question. Yes, no, go. Well, that depends. Shut up. Bum 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 bum. Oh wait, I'm gonna get slapped, huh? I gotta be careful. YouTube's gonna slap me. All right, let's see how many people. No, I need more than 30 to make it statistically relevant. We're at 29. I need one more. And of course, it's just like everything. Like every other market, okay? Like every market, it's a basically 50-50. So the only way to compete in a market that's almost always 50-50, you have to think about that. We can all look at this chart. Half of us think up, the other half think down. So you better act like one or the other, if not somewhere in the middle. Okay? So someone, for example, that played it like a double bottom, higher low, higher high, they're in it, they're done. Stops, drop, they're done. So there's a whole bunch of stops down here now, right? It's funny because it looks like Jim is looking at the stops I just drew, which is actually kind of funny. You were looking up and I was drawing these lines. You're like, why are there pink lines on my ceiling? Like, no, sorry, Jim, it's me. Okay, so, right, it's those that kind of buy up here because they're like, well, I need to see this, I need to see that, and I need to see that. And I'm like, whoa, dude, whoa, late. Because the other half of the market's going to do what they're going to do. And they might not be looking at a 5-minute chart. So you got to go out to like a 15 and try to figure out what they're looking at. What are they going to play? There's things that they can play here to the downside. This is right. Oops. We'll call that a roll reversal. There's probably one here. They might fib this. They might fib that. Okay. So this 618 is probably that 382. And so there's probably a lot going on at those two prices, for example. If you were a bear, you would be kind of thinking that way, right? And so that's why if you were going to do this, do it low. Or wait for the second part of the trap. Remember, the trap says you buy it here or you buy it here. So this is a buy and that's a buy. And you still got challenges in front of you, but that's why, stop losses were invented. Oops. But wait. Okay. So you're doing a risk off trade, by the way. You're thinking stock market down, Bitcoin down, if you're doing this. Okay. We can look at this different template that I have, price action template. And what we're looking at here is the range of the New York session. Okay. We haven't finished the range, but we probably have printed it. Okay. And this and that, one of these prices might become interesting later in the day. We would keep an eye on that. Okay. But think about those that were a bull. So you don't see things on here, but we know this is a big fat monthly pivot point, this price. Okay. And someone else is also looking at that like, hey man, we just double bottomed on a monthly pivot. Now, if you happen to be risk off anyways, that's interesting to you. So now it's more like, based on your opinions, at what point do you buy? Do you buy here because you're aggressive, or here a little more conservative? Or are you buying here? Well, I'd suggest buying that late is too late. But nonetheless, you got to pay attention. Where's the current support, right? There's a line here. There's a line here. And I would mark that kind of like as one little zone. So if we're down here, bulls are going to be vulnerable to this. So that's probably an invitation to get out. If, on the other hand, bulls are correct, we would stay above that. Because we know there should be bears above us. There should be bears right here. So if we end up doing this kind of stuff, we're going to take their stops out and this will go up and you'll have an update. Okay? Think about the battle occurring down here. Let's say this is the battle. Actually, just above us are all the bears. Just below us are all the bulls. Okay? It's the stops that set up the rest of the day. Like, imagine all the battle is happening right now in this gray zone. So let me just back out. Let's use that as the reference point. Okay? Everyone that wanted to buy had orders here. Let's say everything is done with limit orders. Okay? Everyone that wanted to buy said, I want to buy down at that monthly pivot. And everyone that wanted to sell, okay, had it here. Or is going to have it here later today. Okay? Let's just pretend that's how it's done. So the way you're going to make money by the end of the day, because even if you bought here, at the end of the day, we could be lower and you made no money. Okay? Same thing, you could be a seller here and you're in at a great price, but if we're here at the end of the day, you made no money. You had the opportunity to take profit, but let's just simplify things. All the bulls today are here. All the bears are here today. And the only way a bull can make money is taking out the bearish stops. Because if you're a seller here, the same sellers are buyers here. So the only way you can make real money today is have sellers buy along with you as a bull that bought low. Who buys high? Sellers. Well, why would they buy high? Because they're offsetting their losing sell trades with buy orders. So there's buyers here and buyers here. Just different sides of the equation, but it's a beautiful, elegant dance. They're going to say, if we're up here, pop, 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 pop. They're like, mistake, 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 mistake. Okay. Okay. I think it's helpful to look at these charts from a human perspective. I find it helpful to me. I think it's dangerous if we like the other day I sat in front of my charts for about 6 hours on a 5-minute chart scalping. But the danger to that is you can fall into the habitual process of playing a video game. It's like playing Fortnite, not right? But then you have to wake yourself up. I'm like, whoa, 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 this is Forex. There's a reason. You're not just always trading the price action. You have to put the humanity behind this because there's people making decisions. They want to buy it or need to buy it, or they need to sell it, or they want to sell it. So you want to kind of get their perspective in your trade plan. All right? So imagine walking into the New York Open. Some people are like, so what's going on today? Losers. Okay? Great. They're liquidity. Thank you for that free money, Mr. Amateur. Okay? The other side of this is the professionals are like, I need to buy this today, and I'm going to buy it at the open. If I can get myself a dip, I'm looking at that support pivot. Great. Boom. Got it. In. Done. Smell you later, dog. Okay? And the bears are doing something similar. And the winning team is the one that takes out those stops and converts sellers into buyers. And now everybody's a buyer. And now you hit your 3 standard deviations. Okay? Stop hunting. Well, when people say stop hunting, what they typically mean is like your broker, for example, is trying to take your stops out. Now, if you have a broker like that, get rid of that loser broker. Right? Life's too short to have a crappy broker. Okay, so move over to Trader's Way if you can. Okay, or you'll hear like market maker or something, which is a new part of the lexicon, which is funny because nobody said that 4 years ago. so right. So maybe that's true. Maybe it's not true. I'm not here to say it's true or not. It's just comes up. So maybe it's market makers hunting them, but ultimately it's these guys said not today. And these guys got it right. That's it. It's a dance. Left foot forward, right foot back. And Darko smiling. Right. So anyways, that's it kind of thing. It's just, that's how it goes. Now, of course, an amateur is doing both these things all over the place. Okay. And they'll do things like, well, if it ain't falling, it's going up. So then they start buying it. And, of course, what happens next? And then it falls. And then they're like, it's my gold dang broker trading against me. Like, no, your trading sucks. That's the problem. Okay. So anyways, that's how I like to look at it. So maybe you find that helpful too. I don't know. Raymond says market makers. No, a true market maker. Imagine, Raymond, you're in a, you wanted to buy some whatever asset, right? And nobody's selling because the thing is going up. So you're like, I want to buy, but I can't buy. Okay. Now, there are parts of institutions, like maybe you call up Goldman Sachs. You're like, I want exposure to this asset. Okay, we can get that done for you. And they go out and, right? And they may purposely take a losing position on a short term so that you can have the winning position on the short term. Okay, they make the market. For some reason, you can't get the market. So, like maybe, for example, let's say you want to buy Botswanan currency or something. Whatever. I'm just picking on a nearby country. But there's just not enough. There's just for whatever reason, you can't get enough of this currency. So you call up Goldman Sachs. You need them to make that market. You're like, look, I'm trying to buy this currency and I can't get my hands on it. And maybe they call around their clients and they borrow a bunch of this currency from other clients, or call it a dark pool and just take it from them without telling them. But nonetheless, they're like, Raymond, okay, look, we'll sell you this currency even though it's not really available. And they know it's going up, but they're taking a loss, see, on the short term, because right? And then time goes by, you dump it for a profit, and now they got to get it back, and you're right, and whatever. And so they also have this need to make their money back, but they might be willing to lose on the short run to win on the long run if it's going to make you happy, right? But they're making a market that doesn't exist. They're providing liquidity that doesn't exist. Okay? You got snow, Johnny? Really? Yeah. Yeah, it was almost 80 degrees in Atlanta yesterday. Yeah, just amazing. Right. So Darko says, like, the market makers, like big banks and hedge funds and stuff, and central banks. No, see, that's where, like, I don't think that. I've never heard of a hedge fund behaving like that. I've never heard of JP Morgan, like, pushing that back. So I think it's a story that is being sold. And again, like I'm telling you, 4, 5, 6, 7, 8, 9, 10 years ago, nobody ever came into a webinar of mine about market makers. And now people are. And I'm like, I think it's not quite accurate. I think it could seem that way. And I think you could sell the idea of it, but like, show me one. Like, it's just right. Find a hedge fund that is acting like a market maker and pushing markets around. Like, it's way too high, drop it down. Oh, it's way too low, drive it back up. Let's get it to the mean price. Look, I don't think you're going to be able to find a disclosure document or a pitch deck from a hedge fund that says that's what they're doing as market makers. I understand the logic of it. I just don't think it's accurate. That's all. And that's, again, my humble opinion. But I've met a lot of people that do this, and I've never heard that to be true. Okay. JP Morgan will act as a market maker for their clients, but they're not manipulating markets for a profit in that way. It just, I don't know. I'm dubious about that. Like the central banks and stuff getting involved that way, then no. There's the trading desk at the New York Fed is not watching our markets like, let's drop this sucker 60 pips and knock some people out. Like, dude, it's not reality, in my humble opinion. Okay. Okay. Yes, there are algos that they would use, but they have different concerns, and I don't know. Like, I don't know. Yes, there are algos involved, but it's not like a manipulation or whatever. So, anyways, I've said enough on it. Cool. All right. So, anyways, just food for thought, everybody. It's Thinking Friday. Why is it Thinking Friday? We already have our plans done. We did them last night. There's nothing left to discuss. We've already discussed it. We had a 3-hour meeting last night? The file was so big, it was almost 1 terabyte. and it took me like an hour to download it and an hour to upload and then a significant amount of time to get it up on Vimeo. Okay. What about Citadel? Citadel was front running. Now they've changed too because they realized they were going to get in trouble, so they became basically a family office. But Citadel made its money on high frequency trading, not market making. Citadel made something like, it was crazy. Like Citadel made like, let's say 1 million trades in a row without a loss. And you're like, what? How does somebody make 1 million trades in a row without a loss? Yeah, they're cheating. So anyways, so at some point they gave all the money back to their investors because, then you have to start reporting and stuff. So they gave all their money back to their investors and like, we'll just take all this money we stole from the markets and from, teachers and firemen. And cool, we'll just call it a family office now and we don't have to report nothing. Cool. Yen. Okay. Let's make sure they're all in the same time frame. Looks like I'm looking at a lot of stuff going on here. Let's put these on hourly and look for congruency, or even more important, lack of congruency. So look, hour. All right. So let's zoom, give a couple clicks in. Okay. This looks like yen weakness. Yen weakness strength. Okay, so this is pronounced. So pound is weak. Okay, that's about right. And then let's get a couple clicks in here. All right, so it's all about the same. The yen was weak, now turning strong. Yen was weak, now turning strong. Yen was weak, now turning strong. Yen is weak, now turning strong. Yen is weak, now turning strong. So the next thing is, can you describe why it's turning now? Is it profit taking or is it reversal? Okay. If it's just profit taking, then those that made money earlier would surely love to do it again. We call that continuation. And since it's New York Open, you can put that into your idea of like, what are we doing now and how are we going to end the day? So the bottom of the day is higher than the old bottom. Okay. So you're like, that's going to lead us to a top. So this is what we're going to do the next 5 hours. Okay. Right. Okay. Up, down, done. That's Friday. What do you stink? Smell like a plan? Okay. You just have to be risk on. Not that it's going to happen, but you have to make a decision. And if you make a decision, the answer is quite clear. So like, let's make this even better. Okay, but let's change this actually. Let's clear that. I'll even clear that. Okay, great. So now all we have is price action. And so what you're thinking is we've breached that. Okay, we've held there. So this is up. Okay. Okay. Cool. This is up. Cardi B likes it when it's up. All right. So now you can then say, well, what should we do next? We can add biased pivots to the upside daily. Boom. So what does it tell you? Somebody bought it here as a roll reversal on a daily pivot buy zone. The cool thing is you could have had this plan yesterday. But Wayne, how did I know to be a bull? Forget it. Lost. Okay? You had to have been a bull here and here and here. And you're like, well, Wayne, how would I know not to buy that? Well, this is what technical analysis tells you. Fundamentals tell you you're long and strong. Your technicals tell you price and time. Okay? Because you're the boss, you make hard, tough decisions. Great. Cool. But you're like, well, that's really difficult, especially after this drop. Okay, I get it. So then you didn't buy it. So now what are you going to do? Then you're going to say, well, that depends. It's really difficult. Like, dude, come on. Are you going to make the decision or not, right? So there's two ways of playing it. Notice that the roll reversal is Monday's buy zone. So you have to make a decision. Is it going to do this or not? And you're like, well, Wayne, what if I'm measuring it this way and it's going to turn bearish? Well, then you're going to get knocked out of break even. It's like you got to make the decisions and you got to enter well if you're a bull. Okay. Now, a bear would have sold here. So what's going on now? Don't say market makers. I'll cut back on the jokes. Okay. What here is we're hitting stops most likely, right? Because somebody sold there. Oh my God, that was a beautiful sell. You're like, well, Wayne, I lost money. Yeah, it doesn't make it a bad sell. Okay? Doesn't make it a bad sell. Okay? A bear was supposed to sell here. A bull was supposed to buy here or buy here, depending on how it developed and when it developed. That's all there is. There's no other possibility except mediocrity. And this one's now winning. Why? Because it's better? No. But the stops are getting hit, and that's where your profit comes from. Okay? Cool. Conservative target today, 131.70. Aggressive target today, you're going to tickle 131. That's a big day. Yeah, probably ain't going to happen. So that's a big day because of yesterday, right? So I would say that's a fallacious statement. Let's just even target 130. If you can get above 130, I think you're pretty gosh darn lucky. Give yourself a good pat on the back. But that seems pretty. So now we're just targeting back to the 200 fair market value neutral zone. That's that. Okay. Nice little recovery on the peso. See what's happened to oil. Okay. Not up. Not yet. What's the Alamo? The last possible buy zone, right? And we'd be looking at that. So people are making decisions. Bears maybe take profit. Bulls maybe enter. Raymond says, yeah, inside day. Yeah, I bet you, I shouldn't say that, I bet you, but how about this as a thought? Not a lot happens now because nobody wants to take new risk. And then at the end of the day, so near the London close, near the New York close, people take some risk off. Because, you could have all kinds of interesting news over the weekend, right? Right? With the Russia situation, maybe a ceasefire or maybe more destruction and devastation. So it could be really good. It could be really bad. Which one? I don't know. So the market could gap. So you're like, well, Wayne, I'll throw down a trade and I'll drop a 50 pip stop. Well, we don't typically get gaps. But again, this is an unusual weekend. It could be really devastating news. It could be quite a relief. And then the markets open on Monday or Sunday night, and you find that the market jumps 75 pips. Well, your stop will not get executed. You're like, well, why? I put it 50 pips away. Price has to touch your stop for the order to be executed. If your stop is 50 pips away and the market jumps 75 pips against you when it opens, we call that a gap, and your stop was never touched. So now you're losing 75 pips and your 50 pip stop loss is still in the order still in the market waiting to be triggered. So price would have to come up and take you out for only a 50 pip loss, but it could also drop to 100 or 150 that you're losing. Meanwhile, your stop is still there. So there's a small risk of that, but if it were going to happen, maybe this weekend is a higher risk than normal. Normally, it's not that risky. Back in the day, right? Back in the day when I learned how to trade, a bajillion years ago, yeah, I've seen it gap 100 pips or more. Okay, and not on crazy news, just would gap. So you don't see that anymore. I don't think you've even seen a real gap. You're like, oh, look, it gapped 9 pips. Okay, whatever. Okay, not a real gap. Okay, but we could have one now. So whatever. So just be careful. Keep that in mind. Don't gamble. Don't look at this situation as a great way to make money quick. Anytime you're trying to make money quick, you're destroying your integrity. You're not going to last. Okay. So is anybody going to buy Russian banks? That stock is probably doubled now. I'll have to look at that. How about our biddy? Okay, we're fighting this line here. Okay. Fighting that line. Okay, one of the things I've been showing recently is how sometimes these markets really make interesting overlaps. Let me get the line tool so that they're straight. European Open, this is yesterday. American Open. Interesting, right? Asia Open, and that's the bottom of Europe. Top of Europe is the bottom of America. Just kind of interesting how they sometimes intertwine with each other. Well, Raymond, they would suck for a while, right? But that's why you want to buy it. It's depressed. Okay? So if they're taking off Swift, yeah, the stock's going to go down for sure. Now, I don't flip stocks. I hold stocks. I own companies. I don't own stocks. I own companies. So if I bought so like the Russian company, the Russian bank I was looking at, in October it was $20, and I looked at it last night, yesterday afternoon. It was $2.22. I'm like, This morning it was $3.50, and probably now it's $4.50. But the thing is it worth the risk? And then what's the duration of your investment? Okay. So we know Germany is against, okay? We know Germany is against pulling SWIFT from Russia. So, cool. So I don't know. And if it gets pulled, would it be temporary? And then would they get it back? But like, if I buy it for $2 and hold it for 20 years, okay, what's the likelihood it recovers from $2? Okay. So I have a conservative portfolio, of course, and this is like my free money I'm not paying to the government. I take that and I put that in high risk stuff like, let's buy a Chinese electric car company that makes, 1,000 cars a year. Dude, Ford makes 1,000 cars a day, right? Like it's such a long shot. But you're like, okay, let's try that. Okay. Buy a Russian bank stock while it's down 90%. Sure. Let's do it. They still have customers, right? They still have depositors, so they get pulled from SWIFT. Yeah, well, that's why it's cheap. I take that risk. Maybe it doesn't make money for 5 years, but 20 years from now, I look at it, I'm like, oh, look at that. I'm up 1,000%. Good investment. Okay? I can buy myself a nice, shiny new wheelchair. I can push myself around the old folks' home. My journey? What journey? Sounds good. I should have a video on my journey. Except I don't go anywhere. I'm still trying to get to Miami. I can't even get out of Georgia. Yeah. Buy the fear, sell the news. Yeah. Well, I find something liberating of having risk capital that you're like, I'm going to be in the stock for 20 years. And they're like, that's that. So, right. So again, like my first stock trade I made was I bought Apple Computer when it was bankrupt. Cool. Paid $6 a share. And I held it for, I think, 30 years. I did all right on that trade. Yeah, well, no, so, I mean, again, Raymond, I look at it as free money. I don't want to be stupid, but my company, and then there's me. They're two separate entities. Okay? This is just as real as me as a human being in the eyes of the IRS. So I work for my company. Okay? Great. And that's my company is a great company. Love them. These people. Okay? So I pay taxes and the company pays taxes, right? Cool. We all pay our taxes. Great, 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 great. But this company can expense some things. Okay? And it can say, we're going to give money to Wayne's retirement account. Okay? So that money then comes to me. Okay? So now it's back to, I got the money, but it came out of the company, but it's earmarked directly to a trading account. Now, this all has to set up. It's basically like a 401k. It's called something else, but don't worry about it. Everyone's familiar with the 401k. So I have a 401k. My company contributes to it. So now I have this money. Well, if I didn't have this set up, this money would go to taxes. So instead of paying taxes, I pay me. No, sorry, my company pays me because I have a great, wonderful boss. He's beautiful and smart and kind. Okay? So I take this money, but now it's not just money in a bank where I can put gas in the Lambo. It's retirement. Remember that? I can't spend it. But I can invest it. Okay? Now, this is just one retirement account, but then I have sort of not a company retirement account, I have a personal retirement account, right? And all that kind of stuff. So I got other things going on. This is just something separate. So I got my long-term safe mutual fund portfolio and this, that, and the other thing that's overseen by wealth managers at a big fancy firm and all that kind of stuff. And it's just like, that goes over there. Great. This is just this other thing. Okay? And so this wonderful company of mine gives me money that it would have otherwise given the government. Now it's in here and I can't spend it, but I can buy stocks with it. So then I'm like, well, I got all my conservative stuff. Like I'm set. It's all part of the net worth kind of calculation, right? Nice. So this is, I look at it as it's still retirement, which means long term. I can't spend it till I think I'm 65.5. But by the time we get there, they'll probably say you can't spend it till you're 73.3 or something, right? They'll keep changing the rules. But the thing is, I'm not paying tax on the money. I haven't paid taxes. The company won't pay taxes. I personally won't pay taxes. I get to play with it. So I'm like, I'm going to buy a Russian bank during a war, and I'm going to pay $2 a share. And then when I'm 75, it'll be $60 a share. Growing, but I'm deferring taxes. And it grows. And then when I take some of it out to, buy myself a nice wool blanket because I'm all thin and cold all the time, right? Then I'll have to pay some taxes. But then I've grown this from $2 to $60. And I'll be a baller because it's compounding. All this will compound. Okay? And the number I forget, I think the maximum contribution is 3,000. I think I throw like this in there. I think that's accurate. 3,300 every month. Okay? Comes right off the top. The company never made the money. I never got paid the money. There's no taxes. Just bloop, bloop, bloop. Never happened. Invisible money. Pay myself first. And it's now that compounds. So let's say that's $50K a year, right? Compounding in the first year, just year one, let's say on average over that 25 period, compounding at 8% a year. Okay. That ends up being in year one. If you do the math, let's just do it rough, like ballpark, not even ballpark, but let's just say in year one, I put aside 50 grand. And when I go to take it out, it's worth 200,000. I just made $150,000 profit 25 years from now. That's a lot of cat food when you're retired, man. Okay? Okay? That's just in that first year. Then in the second year, that'll be worth, let's say, $195,000 a year, because it was, again, another 50 that I'd not paid taxes. Now I have to pay taxes on the 200,000. You have to understand that. But I'm not paying taxes on, right? I didn't pay on the 50, but I'll have to pay on the 200. But it's okay, man. There's room, because I'll still have 150K, right? So anyway, so in the third year, I'll have that. And you're like, dude, well, that by the time you retire, that's millions. I'm like, I know, right? Long-term compound, right? Long-term, right? What did Einstein say? The most powerful force in the universe is compound interest. Yeah. Company payroll? No, that's what, no. You don't want to earn 1099. That's what, no. All right. Cool. Cool, right? Cool beans. So that's what that is like. Shit. Buy some Russian bank. Who cares, right? It'll be fun. Because I got my downside all protected too. So anyways, it's just money. But that's the thing though, right? Like that your money has to work for you. You shouldn't work for money. Ideally, money works for you. So I just put $3K aside and I'm like, 200,000 when I'm 70. Next year, 200,000 when I'm 71. 200,000 when I'm 72. Just cost me $3,333 a month today. Cool. Now there's going to be inflation and all that kind of stuff, right? Yeah, okay, whatever. Barry's like, thank God for it. Well, I don't know. I have to think about it. What's a worse investment? A Russian bank at 90% discount or Facebook at a 50% discount? Like, I don't know. Right? Because I hope we're not showing pictures of cat videos or pet pictures on our cell phones. I mean, it's such a silly waste of technology and human potential. All right, so we're stuck on the line, guys. On the line. Isn't that interesting? On the line. How will you feel if it goes lower than here? See, we have a high. We also know this is an interesting level. And in the period of this open, we're here. So, right, this is sort of, if you start breaking lower than that low, because this top is interesting, right? It's not just lower lows and lower highs. It's like, this is where, bears would sell. That's all. So if bears have sold there and took this down, well, that's informative information. Okay. There's more to it than this, although this is great after it started. But if you can't predict this, then all of this is nonsense, because you're looking at it like, man, I could have made all this money. Well, if you didn't know this, you were probably selling anyways, because it was used to do this. So you would continue to do that and you'd lose money. Okay. And then you're like, well, now I'm going to start buying because it's going to go up. But then what you're missing is the fact that this is a turning point. It could be a turning point. Okay. So I have always argued price action is important. It's very important once you got a trade on. Right. But you have to understand the basis of the trend of forming and dying, and then you get your price action on. Otherwise, you're always reactionary. Okay. Now, we had a discussion if this is going to drop $20,000. Well, if you're selling it at 40, because this is what we're tickling, right? What do you think people are worried about? 40K. Look at this. Look at this current top. I can't even see it, but we're talking about pretty close to 40K, right? Yeah, 40K on the nose. So let me ask you, do you think there are bears in this world that are selling this sort of zone? Well, yeah. Yeah, I do. Cool. So what's your thought process then? How do you follow up with that? Okay. Sell it as high as you possibly can. Wait for a break low. Wait for a retracement, roll reversal, and then do it again and take it down to here or the current lower low or all the way down to 13,000. Well, it depends on your belief system. Okay. This is a moment of truth now of what's going to happen. So I've been trying to mark this. So let me, I mean, I have to kind of get rid of this now. Hang on now. Hey now. Where are we? We're here. All right. Hey now. All right. Let me zoom, and a boom. Let me get in there. Come on now. Okay. All right. Connect this with this, 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 with this. Okay. Okay. I'm even going to connect the New York Open, if I can grab this box again. The New York Open, see, right here, the low here. No. Okay. So, if there's a bull, boy, do they got to get into this game. Boom, ba, boom. Boom, ba, boom, boom. Sevi says, sir, your journey going to Harvard and becoming a CEO. Well, I was a CEO before going to Harvard. Yeah, at St. Mary's in Kenyatta. Grateful to have this. Yeah, no, I went to Harvard as an old man. Yeah, the beginning of that was my children started getting homework from school. You know, 3rd grade, 4th grade, whatever it was. I don't remember. And they just started assigning homework, but I'm like, have these kids actually been trained on how to do homework? Like, do schools even teach children how to study? Like, they're just like, take all this crap, put it in your backpack. Okay, break your fragile forming spines by wearing these heavy backpacks and take all this crap home. So anyway, so I looked at them like, man, they need a mentor. They need a positive example. And when you tell people, you don't listen to people when they tell you good advice, you're like, screw you, I don't need your advice. Or you say, that's really good advice, and then you don't follow it. So I'm like, they need an example. So I made some phone calls, did this, did that, and found that there was an elite program for the mighty silverback generation. And so I applied, And a lot went into it. You had to apply. You had to do tests. They had to check all your education records. They interviewed your spouse. They interviewed your boss. You had to have references. You had to do video interviews. You had to do Zoom interviews. And less than 1% of applicants were accepted. And they screwed up and they took me anyways. So somehow I got in there. They took, how much of us? There might have been 15 or 20 people that they took for this program. You had to sign up for 4 years, full time. Okay. And by year 2, there was, I think, 11 of us left, and they canceled the program because it was too difficult. We were the first one to ever do it. And by the 3rd year, there was not 11 of us, but 10 or 9, maybe 9. That's it. And they had to redesign the whole program and stuff because it's too damn hard. So I graduated as an A student. Honors roll. But my children, as they were learning, so 1 year, 2 year, 3 year, 4 year of doing homework, Dad was always studying. Dad was always in class. Dad was always taking tests. Dad was doing this. And that was a prime reason. Yeah, Barry's like, you're only a puppy. Yeah, for sure. That's how I feel. But yeah, so I was already an old man. So when I was 20, I ran an organization of 3,000 people. So I already learned management. I don't, but after that, I ran my own startup and ran that for many years and got to know very successful, very powerful people as a young CEO, if you want to call it that. Cool. That was great. So by the time I was 25, I worked at Apple, worked at Cisco Systems, all that kind of stuff, but really learned right away, mostly from my earlier experience of being a leader of a large corporation. You know, what I thought was I needed to work for a company like Cisco or Apple because those are good companies, and that I could do that the rest of my life and work my way up the corporate ladder. And I realized, because of my earlier experience, I much prefer being the boss. Because, you know, when you're 20, let's say, no, when you're 22, 23, how do people look at you? Like, you know how to manage large teams, that you ran a company of thousands of employees, and you work with stakeholders and public relations, and you can run conferences and deal with politics and planning and, you know, the fiduciary duties of managing an organization and the policies and procedures and behind it and all the politics behind it. No, they just see a pimply face idiot that knows nothing. You're the youngest guy in the room and you're the dumbest guy in the room. You're like, dude, right? Like that's what you get. So you're like, man, I don't want to have to prove myself because I'm the youngest in the room. So I'm like, I'm out of here. Screw you guys, right? And I started my own company. And that was a success. And then I went on to be a VC, and that was a success. And then I quit all that entrepreneurial venture capital stuff and became a Forex trader. Simple enough. Oh, and then I went to Harvard. Yeah. All right, bitty, bitty, bitty. Interesting. Right? This is the moment of truth. If it breaks, it's meaningful. If it holds, it's meaningful. And of course, at the age of 23, I had to give up supermodeling because they're like, you need to retire. You're too old. I'm like, really? Yeah. So I had to do that business thing. Oh, up, boop, boop. Okay, it's going to drop a green line on us. I'm not entirely sure, Burned. Less than 50. I'd have to calculate it. I often get it wrong when my wife corrects me. She's like, that's not how old you are. I'm like, really? So, I don't know. You suck at life, and what should you do? You should lie to everybody on social media by telling everybody how awesome your life is. And you'll be fine. Just become a social influencer. What an amazing life. Well, I wanted to be an astronaut. So there was about, I would say, a 3-hour period in my life where I felt like I had failed. It was the walking distance from the military medical testing facility in Oakland, California, to the Oakland BART station. And I got on the BART, and I was on the BART, probably going under the San Francisco Bay to pop up in San Francisco. And by the time I popped out, I reorganized my life, and I was good again. So that walk from the MEPS onto the BART subway, that was devastating because I'm like, I'm not going to be a pilot. I'm not going to be an astronaut. And then I remember thinking my whole life I was also interested in business. So I remember on that BART trip, I'm like, well, I guess I'll be a businessman then. Done. Okay. And a few years later, not many years later, 1,000 days later, I'm managing 1,000 people running a huge business. Cool. I made the decision on that train trip. And by the way, we're only talking about like a half an hour subway ride, right? From Oakland to San Francisco, maybe even less. I'm like, I still remember going, well, I guess I'll be a businessman then. And that was that. Okay, that's kind of interesting. So we got that hold. Got that hold. These are the initial challenges. Of course, the big one's going to be that 40K. But if this is destined to go to 42 today, not a problem, right? All right, so I think I'm going to pull the plug. I think we covered it today. I think we covered it yesterday. I think we covered it the day before. So I hope you have a wonderful weekend. Maybe reach out to somebody you haven't talked to in a long time and say, what's uppy? What's uppy? But have a special weekend. Reach out and reintroduce yourself to your children. Hey, my name is Wayne. I'm your papa. Stay away from me, stranger danger. Right? But redevelop and rekindle those relationships because they're important. Right? Remember, they're supporting you while you're doing this stupid, crazy, ridiculous thing called Forex. It's a tough gig, man, and it's a social disease. Right? Your problems are inflicting everyone around you. So if you can find success, they'll say you're a genius, right? So keep at it. It's tough, but I'm telling you, it's interesting. This is a good gig. Okay? Absolutely awesome, cool gig. I mean, what other job can you do where you're like, you know what? I need to get out of the office. I'm going to go sit on my patio with my laptop. I'm going to have a nice cappuccino and a cigar, and I'm going to listen to CNBC, and I'm going to have my charts open. I think I'll just piss around with a 5-minute chart and do some scalping while I hear the birds singing and there's sun on my face. And you're like, yeah, man. But if you worked at some loser company where they've got you like packed into like a sardine into your fake light, fake walls, fake plants, and there's politics. You think you have a friend at work, but they're backstabbing you because they want the cube closer to the window. And don't forget about Kathy that always burns the popcorn in the microwave at 3 p.m. You're like, come on, you're stinking up the whole place, Kathy. And then what? It's Sally's birthday. Everybody to the break room. We have to have another. Oh, geez, why do we have to celebrate everyone's birthday? Right? All this wasted time, meetings about not having any more meetings. Your pathetic boss that is lazy and doesn't do anything and all this crap. And then you have to pay $500 to drive a car to work and then pay for insurance and put gas in it, all to go to this stupid loser company that underpays you. Why do I make 30% less? Oh, because you're a woman. What? You're like, what? This sucks. Like, come on. Like, where's the reality? Where's the changing of the world? Where's the mission? Like, you know what I mean? Like, wow. Instead, you're like, you know what? I think I'm just going to go outside in the sunshine. And I'm going to have a relaxing 2 hours as I scalp and make money. I'm going to relax while I make money. I'm too terse. I'm too tense. I'll take care of me. But imagine how much money you're saving by not having to drive 40 minutes to work every day. And the idea that also not only does it take time to drive to work every day, and you have to pay money for your car and your gas and your insurance and your tires and your maintenance just to go to your stupid job. But dude, one day you could just be driving to work and you're switching the channel and I don't know if people even listen to radio anymore, but whatever. You're going to work and you're playing with your iPod or something and boom! Semi truck just runs you over and kills you. It's a risk. You're dead. Well, what happened? The guy driving the big truck was messing around with his phone too. Oh, sorry, his mistake. You're dead. It's a real risk. Instead, you wake up in the morning, you shower. Oh, gotta walk the dog. Great. Go in, have a cup of coffee, go down to your office. I'm at work. And if anyone's going to burn the popcorn, it's you, for crying out loud. Okay? You. You're the boss. You're the world. It's your reality. You're in control. And nobody's screwing you financially because you're not tall enough or something, right? Oh, we only pay tall people. Oh, we can't promote you. You're not tall enough. We only have tall senior executives at this firm. Right? Whatever. Okay? So you can control your destiny. And ultimately, you're going to find that that's the greatest benefit. Yeah, you'll take care of the money problems. Once you figure all this, the money problems are fine. You'll get other new problems. But the thing is, at least you're in control. And I think, when the world goes to crap, right? And when we hit bad times, the fact that you don't have control, that you might lose your job, they might cut your salary, they might cut your hours, they might do this to you, this other thing might happen to you. It's that lack of control that I think is the most horrible and the most fearful and the most damaging psychologically, right? So if you are one of these people that at one time in your life, or maybe even now, Sunday hits and you cringe and your stomach churns and you get a headache and you're like, oh my God, I have to go to work tomorrow. That can end. I look forward to Sundays because the market's open. I look forward to the next week. I always do. So if anything, that's what you need to work toward. And that's where you need technical analysis, fundamental analysis, trader psychology, patience, discipline, and work ethic. And over enough time, you're going to figure this out and you're going to be way happier than what you think. It's a journey of it's a hero's kind of two journeys. Like you start this journey because you think you're going to make a lot of money. And what you'll find is 5, 10, 15 years from now, you're making a lot of money, but you've changed your life in radical ways that you haven't imagined, and you're so much happier. But you got to earn that. So have a nice weekend. I'll see you Monday. Unless you're in my day trading group, I will see you Sunday afternoon. Cheers.